Welcome to the market close, middle of the week, Wednesday. Fantastic. Always fun to be here. Of course, this one's a little different. We only have the Canadian market that's open. So the US market is closed today for Juneteenth. So no, we don't even have to look at the American market. We may, if you guys want me to look at it, we'll look at it. But yeah, we just got the Canadian market. So we should have a pretty chill close, I think. However, there is a little bit of drama. That is that the market's red. So we do have a red day, as of course you can see from the Mountain Finance screen in behind me, always reflecting whatever the TSX is doing. You know, that doesn't always mean that they're both doing the same thing. All right. Let's actually get to that market here. Give me a second. I forgot to add my screen. So here we go. This takes a couple seconds, couple clicks. Here we go. And there we go. I want to put me down there in the corner. All right. So as you guys can see, the TSX right now, we got about 15 minutes left in the market. It is down about 0.5%. So negative 0.49. So, I mean, it's not that bad. Hopefully there's a little bit of buying opportunities for you guys today, but it is down a little bit. We're going to completely skip over the US stuff. That's their Tuesday data. Gold down a tiny bit, silver up a tiny bit, WTI is down, and Bitcoin just didn't have a great day today. In fact, Bitcoin almost didn't do anything. So this here, you can sort of see right over here. This is the Bitcoin chart. Just at the end of the closing, it finally started to move down a little bit, but there was very little movement on Bitcoin today. Now, keep in mind, with the U.S. markets closed and all of those Bitcoin ETFs in the U.S., no volume on them, that could certainly be a reason for little to nothing happening on the Bitcoin chart. Let's take a look at that heat map. All right. Oops. There we go. Let's turn everything on. For a second, I was like, wait a minute. Is the market lying to us? But no, here it is. Look at this. We got some drops. Most of your banks, so TD down 0.66%. And look at this. Look at the railroads both down. CNR down 1.53%. CP down 1%. You know, railroads are pretty expensive stocks. So anytime they do go down, that certainly can present an opportunity to buy the dip. So nothing too shabby with that. Let's see here. C&Q down a little bit, 0.15%. Nutrients down. Dollarama's down. Alimentation Couche-Tard is up 0.01%. All right, let's actually take a look. Who is winning? There's got to be some winners in here. Let's see here. We got... Actually, let's get rid of one more. There we go. Let's bring in the big winners. Looks like Air Canada. Look at this, up 0.70%. Lightspeed's up a little bit. TELUS International, look at that, up 0.51%. Even BlackBerry. Who would expect BlackBerry to be up? But they're up. There we go. Nice. TPX.A. So this is Molson Coors. I was like, who's TPX? I guess they're up for whatever reason. But now, are they up though? Look at this chart. So if you look at this chart, since the beginning of April, they've been on a very big down trend until just recently, around the 12th of June. They've started to rebound a little bit. So this could be more of a rebound than anything else. But hey, if you're invested in them, take it. Fresh, look at this, fresh 10.39%. All right, very, very interesting. Okay, so we got a few different interesting stories sort of rolling out onto the Canadian market. I'm going to pull everything back here so that when we take a final look at this later, we can see what's going on. All right, ETFY, look at this, VFV still up 0.11. Gotta love that. Really not expecting a lot of movement on like this one, because VFV mostly they're looking at American stocks. That's where they invest in. So you shouldn't get, when the American market's open, you shouldn't get a lot of movement, just a little bit. And that's basically buying and selling pressure that would cause that movement, because all of those stocks are not moving. All right. And we'll skip over the American one. See, well, we'll show you. There you go. Now we'll skip over. All right, crypto. Holy cow. Look at this. Look at the red. This is very, very red. We got Bitcoin down 1.88%. Ethereum's down 3.10. Solana's down an even 5. And look at all this red. It's just going, it's going in here. It's just going in. Let's see. I'm going to pick a random coin that I have no idea what it is. I have never seen it. All right, let's go in, because there's so, holy cow, come on. You got to love it when the mouse is just not working. All right, let's pick a random coin. Here's one. Mina. What's Mina? It's down a lot. Yeah, Mina. Never heard of it. No idea what it is. Sounds like a character on a Japanese anime show or something, but yeah, they're not doing well. They've been on the downward trend since the middle of March. So I hope none of you guys are invested in Mina. So no idea. But that's kind of the whole idea, is to see if I can find a crypto I've never heard of. Maybe we should introduce Mina to Brett. You know, the two of them could get together. I don't know. All right. Let's get to the chat. You guys are just all over the place here. All right. Vic was in first with an early. We got Bleak here with present. Meow is here with a high, and we got a hola from Al Bundy, and we got a whoop whoop howdy all from JJ. Samara is hi all. Stan is hello all. And Vic is CNR dropping. Yes, we saw that. CNR is on a little bit of a drop. Maybe it's a buying time. It's hard to say. I do love CNR overall as a stock. And Vic says the Oilers winning. Yes, holy banana bread. The Oilers are just they're not going to lie over. They're not going to, and that was the thing. And I had mentioned this, I think, on the weekend. When they came back, after being down 3-0, they came back and they exploded that 8-1 game. And here's the thing. Florida had to take control of the next game. So the one last night, they had to take control of that nice and early, because if they didn't, they were in trouble. And they didn't. So they were in trouble. All the momentum right now is on Edmonton. Like, there's no pressure on them going into Edmonton. You might say, "Oh my God, well, it's home. They can't lose the cup at home." They've already done more than anybody's expected. There's no pressure on them. Basically, this is a game for Florida to lose. I think they're gonna lose it. Actually, I think we're gonna go to Game 7 now. I'm not sure if Edmonton can make it all the way. It would be fantastic. But I think it will definitely be, I think the next 2 games will be pretty good. Unless I'm wrong and Florida comes back and says, let's just end it. We'll have to see. That game is what? Friday night, I believe. 9 says, Oilers knocked out the Choke Nucks. They are my champions. There we go. Sometimes that's the way it works, right? If a team knocks out a team that you just absolutely do not like, then they become your heroes for sure. Amvas says, hi all. Wondering, is a CAD REITs impacted if US bonds go up for the wrong reason? Inflation and US REITs continue down. Thanks, and hope you are on the East Coast. Hope you all on the East Coast are staying hydrated and cool. Yeah, it's The humidity's right now, the last time I looked, it was like 44. So it actually felt like Florida. I went outside to put some stuff in the recycling thing before the recycle people have arrived. I don't even think they've arrived yet. But yeah, it was definitely really humid hot. So and I think it's most of Ontario, Quebec, and I think it's even pushing into the Maritimes a bit too. Now for them, they might just be getting that humidity a little bit later than us, but we've got today, and I think we have another one tomorrow. So it's not good. It's not good. But okay, so the U.S. bonds, I don't think they're going to have a huge impact on the Canadian REITs, and the reason for that is right now the big driving force in the Canadian REITs is the debt that a lot of them have. So what will really impact these is, of course, when the rate cuts come down, that's going to be good for REITs right across the board. So yeah, it really, I would look at the debt, look at the rate cuts, look at how much they're paying in rent, or sorry, in interest, and the overall Canadian economy. I think all of those factors are going to come in. Now, if the U.S. bonds going up, or if the U.S. has more inflation issues, well, that could impact Canada. It could, for one, it could cause the Bank of Canada to hesitate and say, okay, well, maybe we shouldn't be cutting rates so fast. So that, of course, will then have the knock-on effect on Canadian REITs. But for now, I wouldn't worry too much about the U.S. catalyst. If anything, worry about what U.S. catalyst will do to the overall Canadian economy. And then whatever that impact is, look at that impact versus REITs. All right. And we got 9 in with another unholy banana bread. And then Paul's in with a hello. Excuse me. Vic says, TELUS is actually down at 21.24 as of this second. Holy banana bread. Yeah. That's interesting. That is interesting. I mean, here's the thing. TELUS, they're going to be fine on the long term. All of the issues that they're having, it's all going to blow over, though they will take their fines. They will take the beating they've gotten in the public eye. But when all is said and done, they're a strong bank and they will bounce back. So if you're looking for long-term bank exposure, TELUS is not bad. Right now, you're probably going to be able to get the best. If you compare it to, say, 5 years down the road, this will be the best deal out of probably most of the banks right now. So just something to keep in mind. All right. And Al is throwing in his opinion on the Canadian REITs. And he's saying that they're unaffected by American REITs. Yeah, exactly. Down when the prices of houses dropped in the U.S. Yeah, and even still, like if you go back to the housing crisis, so the big crash in 2008, a lot of the impact on Canadian companies were more or less Canadian companies that had a lot of American assets. Those are the companies that really got hit hard by it, where Canadian companies that didn't really have like our Canadian banks, for example, they weathered that just fine. Not to say that it was perfect, but it was nothing like the way it has happened in the past. All right. Paul says, let's see, the TELUS CEO brought the share price to $6 into the early 2000s. Maybe he can bring the share price to $6 again. Oh gosh, I cannot. For the likes of me, I don't think I could see. I have a hard time seeing them even going under 20, to be honest. Not to say that they can't. They need, what they need is if you all right, if you want to, let's say you're playing the I want TELUS to fail hard. You just sort of, maybe if you had some kind of a public catalyst, like if you look at TD, for example, with the whole money laundering thing, that's been a big issue for them. But you could conceivably, we got about a minute to the bell. You could conceivably do a similar thing to TELUS if they have some kind of baggage under that came out. But $6, I don't see that as being too likely. Actually, I don't even know what their price is today, right now. So when I think I started to answer that question, I had TD in the back of my head. So, But yeah, I still don't see TELUS going down to 6. Paul said TELUS might have had 1 or 2 stock splits since 2000. Okay. Al Bundy, TELUS is a bank. That was me. I was still talking about TD. TELUS is not. TELUS is one of our top 3 telecommunication companies in Canada. Not a bank. Not a bank. I had TD on the brain. We got about 10 seconds. I'm going to get this ready here. All right. Mohammed says, hi, got 200 shares of AP. Allied Properties. Oh, it is time. Woo! There we go. Good old Wednesday bell time. So yeah, we got we got some fun. All right, GID, HPS.A, so Hammond Power Solutions, is dropping hard. Think they will have better earnings June 25th. I think their earnings are going to be fine. I think that will certainly help them somewhat. The big thing is with HPS.A as well as HMM.A, they did explode really fast. Like they grew. So a little bit of a correction is absolutely normal. The thing that I do like is both of these companies, they're very much in demand. So it's not a situation where you have business in trouble. Their business is not even remotely in trouble. And things are going to start looking up for them as, of course, we move a little bit forward. I think the rate cuts will be good. Well, the rate cuts will actually be really good for HMM.A more than HPS.A for the simple reason that HMM.A is part of their expansion. They've been utilizing a lot of, we'll call it good debt. If you're using debt to expand your business, to me, that's more of a good debt. Opposed to if you're, let's say, for example, you're using debt to pay out your stockholders and dividends, that's not so good debt. But HMM.A has been using good debt. I think they're in good shape, and I think it's going to look fine. I actually don't mind. I'd love to see them come down even further, to be honest, just to get some better entry points, because I know long term, I have a lot of faith and a lot of confidence in both of those Hammond companies. Let's see. Al says, what happened to TELUS that made its stock drop? I wouldn't even say that it's so much TELUS. It's pretty much the entire telecommunication sector. There's been, I don't know what you call it. As people have been getting a lot more concerned, worried about recession, worried about the economy, there has been, people have been doing little things like, dropping out of higher cell phone plans, trying to simplify things. A lot of people haven't. Some people haven't. Some people are like, I cannot get rid of unlimited data on my phone. I just can't. So they have experienced a lot of, sort of, what are we going to call it? The wake of what's been happening when it comes to how Canadians have been sort of panicking. Now, one of the things that you also have to look at too is we now have a situation where, because of Rogers buying Shaw, they couldn't take all of it. Basically, a part of Shaw that they couldn't have was Freedom Mobile. So Freedom Mobile ended up getting sold to Quebecor, which is great because now with Quebecor now can use that to sort of provide service right across the country. So they are technically now our 4th national carrier. I don't think they're doing it. I don't think they're being as aggressive as they should. I think if Quebecor really, really started to get aggressive with it and really pushed it out, they could certainly take a big dent out of the big 3. But they haven't. They are there. You can go and get Freedom. And the problem is, and it's still the same problem with Freedom, is that your coverage is great in the cities, but when you start getting really far out of the cities, you start to get into some issues. You don't have the same coverage as what Rogers, TELUS, and Bell has. So it's just one of those things that people keep in mind. But I mean, if you're a person who lives in a city, so if you live in a big city and you almost never leave that city, you're probably better off switching to Freedom Mobile. So just something to think about. But if you do regularly go outside of the city a lot, then you probably want to stick with one of the big three for that simple reason. 9 says, dumb question, but if you do multiple sells in a TFSA of the same stock within 30 days, could you be audited for that? No, not if you're doing multiple sells. As long as you're not buying back. It's the buying back within 30 days of a sale that gets you. But here's that thing, and I'm going to put that out here. So let's say you had 100 stock, 100 Banana Co., and you went and sold 10 on the 1st. Then on the 15th, you sold 10. But now you're sort of thinking, okay, I want that 10 back I sold on the 1st. So I'll wait 30 days. I'll buy it back on the 1st of the next month. Well, you can't at that point because of that second sale. So the second sale where you sold another 10 on the 15th, it resets the timer. So you can't buy any of that stock until basically the 15th of the next month. So you have to sort of pay attention to things like that. But I wouldn't be too concerned. Just don't buy back. As long as you're, not selling and then buying back right away type thing, you're good. Mary's in the house with a hello, and that means, folks, it's time. It is time to hit that like button as I have a sip of coffee. I could taste the blue, but not as much as I wanted. So a couple of you guys didn't hit the like button. Hit that button. Hit that button. You don't want Mary coming over and saying, hey, guys. Paul says, let's see, TELUS share price was $34 in April. Yeah, I mean, a lot of the, and here, let's, all right, let's take a look at this here for a moment. We're going to go over to TELUS. I go TELUS D. There we go, TELUS. All right, so you see right now, they're just above $20 to $21.21. But I'm going to come out to the 5-year. So you can sort of see here, like this here was the height of the pandemic when everybody had tons of money. And a lot of people, are probably, with all of the government supports and that, I bet a lot of people were probably just eating up extra services, getting new phones, all of that fun stuff. So, all of the telecommunications did well. But then as people started tightening their belts, we had a bear market, fears of a recession, and rates going up. Well, that's what happened. But when you look at this 21, well, look at this. The last time they were as low as they are right now was all the way back here in 2020. And that was the pandemic. That was the pandemic drop. So let's ignore the pandemic drop. And let's just look at, there we go. If we look at real time, minus that pandemic drop, they haven't been this low since about 2016. So, there's a lot of room for them to grow. Now, I don't think, and I will say this, I'll say this with almost every company. When you look at this exaggerated peak at the peak of the pandemic here, just before we went into basically here's the bear market right in here. Before we went into the bear market, you almost have to ignore it. Like the chances of us getting back up to 34.90 or 34.40 or so, slim. I mean, we will get there eventually, but it doesn't mean that we're going to automatically correct here and go zip all the way back up there. It's not going to happen. It's going to take them a while. I think more realistic, 25 from 25 to 28, I think in that area is what is more realistically, at least for the time being. So we'll have to sort of see and reevaluate as things move forward. All right, now that we're over here, very quickly, our final look at the TSX, and it did end up at a negative 0.48. Look at that. Gold is still down, silver still up, WTI still down, and Bitcoin still down as well. So not the greatest. And on the heat map, you can sort of see, we got a few different things here. Vince was talking about Canadian National Railways, and you can see they've had since about the 14th of June, they've been on a downward trend. So we're getting a little bit of a correction here. That's fine. That's fine. Right now, like here's a thing I will show you guys. Let me give you a second here. I would love to add another one in the 0 to 100K challenge. So right now, CNR, at the beginning of this challenge, we got an adjusted cost base of 151.74. So if this were to go below 151.74, I'm going to probably add another one to the challenge. They're really expensive for the challenge, but it's a stock, a great stock, I think, especially long term. All right. Whoops. And, you guys can sort of see what I was doing today. HXQ, QQCC, QQCL. They won the vote, by the way. So, I was actually using that to script a little bit today. All right. Yeah, so that's CNR. We already looked at TELUS. Perfect. Like I said, not a lot going on here with this day. Kind of a big, you might call it a nothing burger, a little bit of a nothing burger. And once again, look at that, VFE almost back to zero. And I expect VFE to be, pretty much as close to zero as you can be when you're dealing with a day where the U.S. market is actually closed. Whoops. I was just pulling that in a little bit. All I do is touch my mouse and this thing starts moving. So it's kind of fun. All right. And then the cryptocurrency, a little bit better. If you look at it this time, look at this. This is actually 15 minutes ago. This was all red. Like, look at this, Solana, negative 0.78. It was negative 5. It was at negative 5%. So not too shabby. I'm liking this. I'm liking this a lot. So, that's kind of cool. It's kind of cool. Oh, I totally forgot. Let's go big screen here for a moment. We'll go big screen. I totally forgot. I was going to give you guys a chance to earn a Friday. So if you guys want the Friday market close, and I know a lot of you really love that one, we'll do the same. We'll do the norm. We'll do four supers. Doesn't matter how much they are. We'll do that. We'll do the market close on Friday. So we got till the end of the stream. I know I should have said it earlier. But that's fine. All right. 9 says, oh, good. Easier to trim profits if you can do multiple sells and easier to use cash ETFs. Oh, yeah, absolutely. Absolutely. It's just, and that's why I'm saying if you want to use cash ETFs in your TFSA, just use a couple of them, right? So maybe, for example, you go with, you have your cash ETF A, and you dump your money in it and then you're using it through the month. But then when you go to replenish your money, put it into cash ETF B. And then that way when that one's empty, when A is empty, you then start emptying B. And by then you should be close to time where you can start putting some money back into A. If you're not, then use 3. You could have A, B, and C. So, it's just one way to do that, to sort of get around, not getting yourself flagged. Now, here's the funny thing, though. Once the CRA, so right now the CRA, when they look at it, another factor that comes in is volume. So if you bought one share of, some stock that was like $20, and the next day it went up to 25, and then you went and sold it, and then it went back to 20, and you bought that one share back, even though that one move technically would be day trading, because of that low volume, they're more than likely not going to even look at it. But, and I put this out, it is still technically something they could if they really wanted to, but they usually are not going to. They're looking for people who are doing it bigger time than that. And I'm not advocating that you should be trying to get away with stuff, because here's the thing. So with humans doing the looking, it's one way, but as more and more algorithms do it, and as more and more AI gets in, AI might just be, they might be absolutely strict. Like, okay, this is the letter of the law. I don't care if it was 50 cents. We're gonna hit you with some taxes. So, I always say, just make it a normal habit that you don't do it, and you'll be fine. Mario, just had my coffee. Fantastic. Gotta love coffee. Paul says, we switched 3 telecell plans to Kudu at 39 a month, 20 gig, and Kudu just offered us 35 a month at 65 gigs. Our Telus TV service, we went from 7 themes and Crave down to just Essentials, TV and Prime, Disney Plus, Netflix. But you see, you're not alone. A lot of people are doing that type of thing just to help save money. And I hate to say this. I hate to say this with a passion, but it almost goes back to what that whole controversy with Christia Freeland when she was saying, "Oh, just cancel your Disney Plus." I didn't. I thought. Here's the thing with that. Even though she was saying, "Okay, yeah, this is a way if it have narrowed it down to any one particular service." If anything, she should have just said, cancel the streaming services you don't use, because that does make a lot of sense. If you have a streaming service that you're not using, and here's what some people will actually do with streaming services. So let's say you have a bunch of shows that are on like maybe 3 different services at a time. So what some people will do is they'll let things hoard because they want to binge watch anyway. So, pay for Netflix 1 month, watch everything that's on Netflix that you want to, then cancel that, maybe go to Disney Plus the next month, do the binge thing with Disney. And then, after that's done, cancel that. And then maybe Crave or Paramount Plus or whatever, whatever ones that you're using. There's so many out there. Problem is if you subscribe to them all, how many of them, just let me ask you this, how many have you been subscribed to where you're waiting for a show you want to watch? And that waits more than a month. So you might you may, for example, be paying Crave, a monthly fee between seasons of like the new, whatever latest Game of Thrones spinoff comes off, so it's just, like House of the Dragon. That's the one I was trying to think. So you could just be simply paying for that gap in between. So, it does make sense. You can save a little bit of money here and there. All right. Mohammed says, what is the best way to find undervalued stocks? I started using RBC screeners and they're giving good results so far. You're in the right vein. So RBC is not so much RBC, but screeners in general. So let me just pull this up here. All right. So there's a few different ones. Let's actually do the TMX one for now. So TMX, TMX Money, it's just simply money.tmx.com. Everything on the TMX site is absolutely free. Even if you create, like you can sign in and create a profile and set up individual watch lists and everything, that's all free. So there's nothing, they don't even have a paid version. Because that's what I looked into. I'm like, I like this site. Do they have a paid version? What else do they offer? But they don't. They do not have a paid version. So you can go into tools and they have a stock screener. They also have a TSX ETF screener. And they also have an ETF comparison tool. But for this here, we'll go to the stock screener. So with the stock screener, you come up and you can look. You got tons of criteria. At first, it shows you, well, right now, absolutely nothing because you don't have any criteria. Now you can choose, let's just go over here. You got Canada and you got the US. So you can actually look at for US stocks here if you want. And they've got equities or ETFs. So let's say we're looking for just a company stock. First thing you're going to do is you're going to look at, you can look at the popular ones because these are ones that people will generally look. So I will sometimes use exchange. So if I add the exchange filter, as soon as I do that, it'll pop up down here and you can then choose your exchanges. So right now it's on the TSX Venture, but let's say a lot of times I'll stick between the two of them. So the TSX and the TSX Venture. So I may exclude NEO, I may exclude CSE, but maybe if you're looking for an undervalued stock, you might just be saying, okay, I'm gonna look at all of them, or maybe all but one, or maybe you don't even want the big stocks. Maybe you're looking for that underdog, like you're looking for a great penny stock. So you might actually not use a TSX in that case. Then, and here's the thing, you got to start thinking about what type of stock you're looking for. So we go to company basics, for example. So one thing is stock price. So I'll add the stock price. So let's say, for example, I'm not interested in a penny stock. I'm looking for a stock that has a little bit of value. So I'll set my limit, my minimum. Let's just say I want something that is more than $10 a stock. So I can put $10 in here. And that's now, this list keeps on changing. It's now removed everything that is less than $10. Okay. I can do some other things as well. Let's look at, let's see, let's go to performance. So I want, let's see, price performance year to date. We're going to choose that one. We'll add that filter. All right. So let's say I'm looking for something that's already proving itself. It's doing well this year. So I'm looking for something that has at least a 10% return year to date. So bang, we're now down to, so right now we're down to, let me see here, 3 pages of companies. So that's still way too many. So I can start looking at some other things that are important to me. So maybe I'm thinking, well, let's see. So sometimes if you don't know where something goes, you can come up here and you can type in, so for example, debt. So debt to equity ratio. So, okay, let's go to the debt to equity ratio. Where is that? Right here, debt to capital, sorry. There it is, debt to equity. Let's add that. So I'm also looking for a company that has, has their debt under control. So in this case here, I'm going to say that's at 0. Whoops, excuse me. All right, I'm okay with the 0. But it's on the top end. I'm going to say no more than a point. Let's say no more than a point. Whoops, 0.5. All right. So there we go. So now we've got companies with very little debt. Now you'll notice because we included all of these different servers, we got all of these like NVIDIA. These are the CDRs. They're all in there. So I can come back and say, okay, well, I don't want to see all the CDRs. I'm just looking for a regular company. So maybe I have too much here. Let's just get rid of the CSE and we'll also get rid of the NEO. We'll stick to the TSX and the TSX Venture. Now, when we come down here, you'll notice we no longer have that. Now, for the criteria that we put in so far, we've only got a single page. We got all of these stocks in here. So you can start looking at these right now, or you can narrow it down further. One way to narrow it down further is maybe you're looking for, maybe you're really, maybe you're like me and you love return on equity. So here we go, return on equity. We'll add that. All right, let's add that filter. Bang, it's there. All right, now I want it to be positive. I'm wanting, let's say I want at least a 10%. Anything under that to me is it's not as good. But now we still have, most of these companies are still there. So I'm like, okay, let's be a little more aggressive. Let's change it to 15%. And we do that. And you'll see the list is much shorter now. So now I've got a smaller, short list of companies that I can take a look at. And I can come over, for example, let's say the performance thing was my big thing. So I can come over to performance and I can go performance year to date. All right. So at the top of the list, we got DRX, we got BQE. So these are some companies. So we've experienced DRX on the channel. What is BQE? I don't know. Let's take a look at them. This is a new company to me. I've not touched them before. So BQE Water, interesting. Let's how much are they? They're $55 a share. Let's take a look at their 3-year. All right. Oh, this is interesting. So some kind of catalyst exploded them. So something happened. I don't know what, but something happened. Holy banana bread. All right. Now they're a growth stock. They don't have a dividend. Let's go and take a look at this key data. So there we got our 15.89. We got a 12.38. We got 11. So their debt to equity ratio is 11%. I like these numbers, but I'll tell you, before I would even put any money into like BQE Water, I'm going to want to know the story. All right, we're looking at now in the 6 month of what's happened. What has changed for BQE Water? And it's a good change. mind you, but I'd like to know what it is. So that would be one of those questions that I would ask. And I might have to go into the news and things like that. But anyway, that's kind of one way that you can use a screener to try to sort of help you get to, where you are going. All right, let's bring Big Me Head. Big, I called myself Me Head. It's almost like Meathead. It's hilarious. Hambas says, if your retirement YouTube views shot up, I admit that I've been going over them a few times. Okay, your last retirement live, I appreciate how you went over the years. Will there be a condensed version? So yeah, that was for the channel members. Yes, probably. I think that's a valuable. I think the information in that live stream would definitely make a good video. So I'll certainly do that. Probably not right away because here's the thing: if I do a members only live stream and then I just make a video of it the next day type thing, it's kind of takes a little bit away of the specialness of being a channel member. So yeah, so right now we'll have to wait and see. But I would like to do that into a video. All right, Mario says all my stocks are down. Hopefully not all of them. Hopefully not all of them. Ooh, I see up ahead here we got a. Let's put it up here. We got a super sticker from Paul, $1. That counts. That's one super sticker towards the Friday stream. So we only need 3 left. Now there might be 3 below here that I haven't seen yet. Because I'm a little bit behind on the chat because I went into that big tangent on using a stock screener. But you know what? Hey, it was good. It was all good, right? Al says, a lot of articles or TV segments brings up undervalued stocks like Motley Fool and stuff like that. Be careful with Motley Fool. Fool. It's in their name. I find with Motley Fool that sometimes the free stuff is their best stuff because they kind of use that as their hook to try to get you into their paid service. There are some people who go into the paid service and then sort of do data dumps of that information into like places like Reddit and that. So you can sometimes go in and find out, okay, what is this incredible stock that's behind the paywall? And then when you find out what it is, you're underwhelmed. I've always been underwhelmed by the stuff I find on the other side. So honestly, in my opinion, and this is an opinion, my opinion is that if you like what you see about Motley Fool, that's probably the best stuff right there. So you don't really need to pay them to get any more. Amvas says, in retirement, since taking out from TFSA is not taxed, I intend to transfer funds to non-RRSP to make room for funds transferred out from RRSP. Yeah, well, here's the thing. There's a different ways you can do it in retirement, right? So, and I'm going to have just a quick sip here. Oh, so good. One of the strategies is to never take anything out of your TFSA and just turn your TFSA into straight up income. So that's where you're looking at them covered calls and some of these new covered call with leverage to just sort of create a nice stream of income that's coming out. What's nice about that is you've got this monthly stream of tax-free income that is not, well, because it's not taxed, it's not affecting your OAS clawback, or if you're on the lower end of the income scale, it's not affecting your GIS if you're on GIS. So that's a really good, powerful thing. Now, the downside to that is that, if you never take anything out of your TFSA, it's all still going to be there when your days are done. That's, and some people might be like, well, maybe I want more money to do stuff. And that's fine. That is absolutely fine. You just have to realize that if you do start taking out of the capital from your TFSA, you're of course going to have a lower income going through. And that might be fine. Maybe, for example, you might say, look, I make enough on my OAS. I can, in my CPP, I'm doing fine. I just want to pull that out and buy a camper, so I don't have to live in a house. I can, maybe travel the country. That's cool. That's absolutely fine. You can do that. I mean, obviously, though, one of the things I usually recommend is that when you're heading into retirement, if your TFSA is not maxed and you have a bunch of money sitting in your RRSP, well, one of your goals should be to try to find strategic. And I say strategic because you don't want to create a giant tax event. You want to look for little strategic ways you can start moving some of the money out of the RRSP and get it over to that TFSA. Now, what's nice is if you're not even close to retirement, and for some of the younger viewers, you have that advantage of sort of knowing, okay, when I hit retirement, I want that TFSA maxed, and not just maxed. You really want to grow, and this is where growth stocks come in, right? So here's the big difference. So some people love the income stocks, but I'm always saying income stocks are best when you're older, when you're heading into retirement. And the reason for that is when you're younger, you want those growth stocks to grow your contribution room. So that way there, if you've been piling up with some really good growth stocks, instead of having 100,000 in your TFSA when you retire, if you could have grown it, let's say you could have even doubled it to 200,000 over, the course of investing, and a lot of the different growth strategies along the way, all of a sudden, you're going to have much more income when you do convert it to an income generating portfolio. You'll have a lot more income because, you have grown it to make room for all of that income to be coming your way. So just something to look at. Now, the nice things too is that, if you are looking at never selling and keeping your income, the beautiful thing is that, you don't have as much tax ramifications with the TFSA when you leave it to someone. So, with the RRSP, holy banana bread, it's mostly being taxed at the marginal rate unless you're able to roll it over to a spouse. So, at least with the TFSA, you can leave it to somebody who, like one of your children, for example, and they won't be paying the full tax ramifications. Not to say there's no taxes, but it's much better than what would happen with an RRSP. All right. Actas says, no, PDIV lost again. I know. And I feel bad. PDIV has been like in second place pretty much every single time. So, and I've given them a bonus week this week. So 4, I am giving them another week. They're coming back again next time. And here's the thing. I normally only do one ETF, a deep dive a month, but I want to see PDIV have another fair shot. So the next deep dive is going to be, we're going to stick to the ETFs for one more. That way there, we don't have to wait another whole month to find out if they do it. We'll do it again. We're going to do it again, and we'll let, it's probably going to be a race between PDIV and XEI. Now, here's my suggestion, guys. Take a look at both of them, because maybe if you're not familiar with PDIV, you may be like, ooh, this looks interesting. I need PDIV. And then, XEI the next time. So just keep that in mind. We'll give PDIV will get one more shot here. We're going to do it. Actats has been a long-term follower. So I feel very justified giving them one more shot, and, and also doing that extra one there. So we'll be doing that for sure. All right. And of course, we had the Paul. We already showed this, but I forgot to say thank you, Paul. Vineet says, thanks, Paul. All right. Al Bundy, you skipped my TFSA question. Uh-oh, did I? Candace, you had it on the ticker tape, but you were answering someone else's question. Oh, no. Put it back in. I will get it. It's hard. I never find it going backwards, Al. I apologize. And you know what? As we get busier, that's the type of thing that does happen. That's why those super chats are kind of important, because that way there, you're 100% guaranteed. All right. Kevin and Cass says, yay, I made it to, I got to make a live show. Fantastic. It's good to have you here. Paul says, I receive 40% TELUS retiree discount, so that is why I like my streaming services paid through TELUS. Not too shabby. That's good, though. I mean, That you got an advantage on the rest of us who are paying full price. 9, this channel is better than streaming shows. Oh, thank you. Thank you. There we go. There we go. Maybe one of the streaming services can just rebroadcast us. Mario says, you just get a Fire Sticks and download to get free live stream. Ooh, nice. Paul says the secret for Paramount Plus is don't let it auto renew for the next year. Let it lapse. After a few weeks, they will offer 50% off the year. Ooh, there we go. Any of you who have Paramount Plus on the yearly plan, this is an idea. I've seen that with a lot of different things. There's things that I have used in the past where I didn't need them anymore, but after I leave, they came back a few months, not even a few months, a few weeks later, and it's like, hey, we miss you. We'll give you 50% off. And it's like, yeah. So sometimes it does not hurt to let something lapse and see if they throw a deal at you, or see if you can get a deal to come back. Prairie says, good afternoon, community. Late to the show, was out in the yard treating the canvas tent while Winnipeg has sun, but am here for the rest of the show. Congratulations on that. Vic says, what my fence is required for canvas tent? Oh, well, it's not my fence. It's maintenance. All right. That's awesome. Just ask ChatGPT for the next NVIDIA. Okay. All right. I can do that. Just give me a second here. We'll pull this up. All right. All right. I just typed in what is the next NVIDIA, and it's churning away. Oh, I probably should bring it up. Duh. All right. So it's saying finding the next NVIDIA in the stock market is a popular pursuit amongst investors. So it said these three. It came up with Broadcom, so AVGO, Super Microcomputer, SMCI, and we've all seen that one before, and Oracle, ORCL. So those are three contenders, but honestly, nobody's NVIDIA. But I will give ChatGPT some credit. Those are not bad choices. Not bad choices. So very, very cool. All right. Let's see. Prairie says, I apply wood canvas waterproofing every other. Oh, that's kind of cool. Yeah, especially if it keeps you from getting dripped on at night. Because if I go camping, it's probably going to rain. Let's see. It needed it badly since it should have been done before we went camping last, but ran out of time. There we go. Vic said, I used to live in a tent for months. Okay. I was going to say, was your mom like upset and said, you can't live in the basement anymore? And you're like, fine, Mom, I'm pitching a tent in the backyard. All right. Prairie says, no, helps to keep the cotton fibers tight to prevent water infiltration. There we go. Camping for me is not camping unless in a canvas tent. Classy canvas tent, serious outdoors. Candace is greater than Motley Fool. There we go. Thank you. I will take that, but thank you. And Al says that his friends did tree planting back in the day after high school. I've never done tree planting. I did, though, once transplant a tree. Because, it was when I was in university, and I'd been taking botany as one of my courses, and somebody was saying, oh, I want to move this tree. And I was like, oh. And I said, how big is it? Oh, it's about 6 feet tall. I'm like, oh, I could probably do that. It took me a whole day to move this tree. It looked like trench warfare as I was digging down, trying to get below all of the roots on this tree. It was one of those situations after the end of it. It's like, sometimes you got to watch what you say, or you end up in situations where you're digging a trench under a tree. It can happen, folks. Just be careful. 9 says you can spend dividends in the TFSA to increase the contribution room. That is true. That is true. My TFSAs are worth over 100K and didn't have to sell many shares. Yeah, that's fine. So, and that's the thing. I mean, with a TFSA, your dividends, as long as you keep them in your TFSA, that does grow your contribution room. But a lot of times growth stocks and total return stocks are going to just have that total return bigger because you're getting dividends from them as well. Maybe not so much with the total 100% growth stocks, but that's going to grow it a little bit more, Now, you can argue, and we've looked at this in a video before, that as long as you're reinvesting those dividends, the difference may not be as big as you can, but the difference can be big. So when you're looking at some of these stocks that do like 100% growth over 3 years, you're not going to hit that with dividends. So that's kind of one of those things when you're younger. But as you get older, you start to sort of you have to sort of reel that in, because if something goes wrong, you don't have as much time to right the ship as per se. Patricia says, "Hi, listening." Let's see. Al says, I have a question about TFSA. If you have 500K worth of stock in it and you sell 300K of stock and take out the 300K to buy a car or something, can you eventually put that 300K back into the TFSA later in the future? Yeah, absolutely. What happens? So when you withdraw 300,000, so we'll just say 300,000 of your 500K, you withdraw it. So you've now got 200,000 in space until January 1st. So on January 1st, anything you withdrew out of your TFSA, that space is given back. So if in January or February or March or whatever, you're like, I got 300K I want to put back in, you can absolutely do that. But you have to wait. It resets when you get your new contribution room every year. That's when it resets. So that's one of the beautiful things about a TFSA. And that's some things, it makes it like you look at, for example, your RRSP. If this were the RRSP this was happening to, you pull that 300,000 out, you've lost that $300,000 of contribution room forever. That's gone. Plus, you're going to get taxed on it. So they wouldn't even give you the 300,000 because most brokers are going to charge you withholding tax on that, which then goes right off to the CRA. You can, and if you've got if you got right, if your taxes are all in order and you have enough write-offs, you can certainly get that back at tax time. But yeah, it's fun. We got Hugh in the house who's watching and listening. Nice. Harold is in here. Hey, Candace, for PDIV, will you continuously get that dividend despite how much the stock goes up? I thought companies were able to charge dividend percentage even after buying the stock for $9 at 12%. Thanks. Okay, so here's how it works. So let's say, for example, you're getting a 12% dividend at $9. So when you buy it at $9, you've got the 12% on that $9 for as long as you hold it, because that's what you paid. Now, if the stock goes up to, let's say, $10, and we'll say that $10 is let's say it's an 11% dividend. Well, anybody buying at the $10 is only getting an 11% yield. They're getting the same amount of money on each share, like they're getting the same dividend that you're getting, but they invested more, so they're not getting as big of a bang for your buck. Now, if you add to your $9 shares, only that $9 shares that you bought will be getting the 12%. So if you bought, let's say, another batch at $10, well, those ones would only get 11%, but it's still the same dividend. It's just, it's kind of that whole thing. The yield is just a presentation of how much bang you're getting for your buck at that time that you buy it. And that's a number that will always be moving. So as the price goes up, the yield comes down, but the dividend's not coming down. It's the same dividend. You're just not getting as much bang for your buck. Simple as that. All right. Amvas says, I spoke with advisors, but seems more than promoting themselves, or they are not familiar with covered calls, or I know more than them. I'm struggling with investing. Do you offer a one-on-one paid conversation? I have done it in the past. I normally, it's not a regular service that I offer, but I look at it this way. If reach out to me and we can talk about it. No guarantees, but for the most part, I try to provide as much advice as I can on the air, on the live streams, through videos. But you can certainly reach out to me. You got you friended me on Discord the other day, so definitely reach out to me there. We'll discuss it. No guarantees. Like I said, I did it once for one person, only because they were absolutely begging. So, but I'm going to point this out with a one-on-one. I, I can't sit down and say, okay, these are the stocks you should buy, A, B, and C, because that's illegal. What I can do is I can go over concepts. I can show you how to find stocks, but the final decision on things on your stocks is always going to be in your own due diligence. But I can get you there to show you the due diligence. That's kind of where it sits. All right. Muggsy says, nicely explained, Candace. And Al says, aren't you at risk for liability? It depends on the way you present it, right? So legally, I'm not allowed to sort of sit here and say, okay, if you want to be successful, you have to, and this is on a one-on-one, you have to look at this stock. Now, and this is how the law works. It's kind of a very funny thing, but when I am live streaming, so right here, when I'm saying, I love HMM.A, I love the Hammond stocks, I think they're great. I'm not giving one-on-one advice. This is considered more of a, what's the best word for it? It's considered almost like a teaching opportunity. So it's used as like educational. So you take, for example, if you were to look at some of the financial channels, so like BNN Bloomberg, a lot of the people they have on there, they're not financial advisors. So they legally can't give one-on-one advice, but there's that loophole because of where you're broadcasting. So when it comes down to one-on-one, that's where I have to be really careful. Now, I do come at this with ethics a lot of times. Not a lot of times, all the time. Like, I'm never, ever going to sort of say, okay, here's a stock that you absolutely need to, that you need to buy. I will never tell you guys that. I will point out a stock and say, here's a stock I found. Here's why I like it. But I'm still going to leave the onus on you guys to go and take a look at it. Maybe it's a stock that works with my personal risk portfolio, so my risk levels. But maybe it doesn't work for Al. Maybe it doesn't work for Muggsy. But maybe Harold is like, what? You're only going that far? That's kind of tame, Candace. I'm going all the way. So there's a whole series, but that's the whole thing. So I definitely, my goal is to show you guys how to do the due diligence, to sort of show you how to think about stocks, to give you guys that general idea. And I do introduce you guys to stocks. I absolutely do. But that's why I'm always saying you need to do a whole heaping helping of due diligence before you place your money on the table. And that's very, very true. It's easy to spend money these days. It's absolutely easy. And all I want you guys to do is to sort of remember. So remember when you're in that broker that, maybe you're about to buy some stock that you heard on it from a YouTuber. Maybe it was me. Maybe it wasn't me. Maybe it was somebody else. How long did it take you to make that money? Let's say, for example, if you're not a wealthy investor, because I think I have people here. I have people in the community who have a lot of money, and I got people who are just scraping by, and they're true nickel and dimers. So what I say is always sort of put it into perspective. So if you're about to jump on some stock that you haven't done any due diligence on, just because you heard it on YouTube, well, ask yourself, okay, so that $100 I'm about to spend, how long did it take me to make it? So maybe if you're making $20 an hour, it took you 5 hours. Well, or maybe 6 hours, because you're not, when you work and get $20 an hour, the government's taking their share. So maybe it was 6 or 7 hours, the way taxes work. When you're thinking, okay, would I be willing to just throw 6 or 7 hours of pay away? And people look at it a little bit differently, and they're saying, oh, is it really that many hours to make that amount? Oh gosh. And that's kind of like, places like Amazon. That's how they get you, because nobody thinks it's so easy. Like, you got the one-click buy. It's so easy to spend money that people aren't thinking, okay, how long did it take for me to to get what to get that amount of money. So it's an interesting thing. It's an interesting thing. So that's kind of the way I look at it. All right, now we got number two. Harold comes in at $6.99. Appreciate the knowledge shared. Well, thank you very much, Harold. And keep in mind, guys, these go into the challenge. So the $6.99 here from Harold and the $1 from Paul, that's all going in. I always round it up. So like right now we're looking at $8 going into that challenge. So that's kind of cool. Paul says, Harold Super Chat counts for at least three. At least three. Come on. Yeah, it's funny. And here's the thing. Sometimes I get people saying, "Oh, you haven't raised your bar's not that high," and it isn't. It isn't. So we'll leave it. We still got we still got time. We still got time. Let's see. Larry says, "Are partnerships hedge funds hard to open in Canada? Here in the U.S., Texas in particular, you just need $750 to register the business and $200 per year." That's interesting. I don't know the rules in Canada for setting up a hedge fund, but I know the Canadian government and I know the bureaucracy that we have for almost everything you do up here. So I can't see it as being that easy in Canada. If anybody knows, please drop it in chat for Larry, though. Amfast says, I don't want to get in trouble. For bringing that up. I've been learning, but appreciate to know if I did things right, and retirement conversation only, not expecting to the moon advice. Okay, you see, that's doable. And that's the whole thing is when we talk, it's going to be, it's about the processes. It's about the educational side of it. I can't now, here's the thing. I can make a retirement video. Like I can make a retirement income portfolio and I'm planning to do it this summer. And there will be a lot of stocks in it. And, and some people will quite literally, some people will look at it and say, oh, I like that. I'm just going to copy it all. I would hope that they will do their due diligence and not just copy it all. But I know that there are people that don't do their due diligence. And I say, I mention a stock and they're like, okay, Candace mentioned it. I'm buying it. There are people that will do that. Hopefully though, hopefully you, if you're going to buy a stock that I'm, deep diving or something, hopefully you're sticking around to the end, and getting like the final verdict and, getting my full opinion. Because sometimes you'll get to the end and I'll be like, this is just not a stock that I would buy. And sometimes, sometimes there might be some extra stuff that's not in the fundamentals that I might bring up in the end. For example, there might have been a lot of insider selling, things like that. So definitely always watch those to the end before you, if you're not going to do your due diligence. But I still highly, 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 highly recommend that you do your due diligence. All right. Zashif says, will NVIDIA break up further or go down tomorrow? It's a good question. Very good question. It's kind of funny. I mean, I don't know if they're going up or down, but my gut says right now NVIDIA is kind of unstoppable. And I think it's kind of almost created a feedback. It's like a FOMO loop. So the FOMO, fear of missing out, is as it keeps getting more expensive, as it keeps breaking records and passing companies in market cap, investing people, especially on the retail side and also on the institutional side, are getting more and more excited about it. And so I think there is a momentum there. It's hard to fight against it. So I think it's going to go up. I think it's going to go up. I think it will definitely, if it goes down a tiny bit, I think by the end of the day, it might go down and then go back up. But I think it'll end the day higher than it started the day. And I definitely think by the end of the week, you're probably going to have it up around 137 maybe. But, we've got the 140 watch on. So, and people keep on making a lot of money off of NVIDIA. It's hilarious. Well, not hilarious. It's great that people are making it for sure. Mario says, I will vote for PDIV. Well, there you go. Act as is going to be your best friend, Mario. Act as will say thank you. Let's see, 35 partners or less. You don't even have to register with the SEC. Ooh, nice. Not too shabby. Al says, Amvest, I already have my retirement game plan. I am going to have 100K to 500K in dividend stocks. How I will pick them is copy the top 10 holdings of VDY and live off the dividends with SSP. So SS is Social Security, Canada Pension Plan, and Old Age Security. All right, and here we go. Number 3, Paul's in with another $1. Thank you, Paul. And right away, right after him, we get a super sticker from Kevin and Kaz, $2.79. There we go. It's done. We get a Friday stream. Simple as that. Fantastic. Thank you to all 4 of you. Well, technically 3. Well, because Paul was in there twice. So thank you. Thank you for the support, guys. It means a lot to the channel and to me personally. I love to see these things. Paul is just laughing. All right. Al says, Amvest, then the rest of my money I am going to throw into VOO, and maybe a small portion I will play with, like a hype stock like Nvidia. There we go. We've been talking about the play money. I should do a video on play money. That would be good. That would definitely. I have so many great ideas, and it's just like, if I could only just freeze time and make about 100 videos, then just start pumping them out, that would be cool. Paul says, Candace stock goes down. Don't blame her. Stocks go down for no reason. Small cap are volatile. Yeah, absolutely. And it is the truth. It doesn't matter. Like every single, you can even look at somebody like Warren Buffett. Warren Buffett, he's a genius when it comes to stocks. He knows his stuff, but he's picked a lot of losers over the years. But he's also really, really doubled down on all the winners. And that's been the big difference with somebody like a Warren Buffett. So yeah, as an investor, and we're not talking about me, let's talk about any investor. You got to be prepared for the losses. You're gonna have stocks that you're gonna regret. You will have stocks you absolutely regret getting into. It's gonna happen, and there's and don't look at it as saying, oh my God, I'm a horrible investor. I bought into this horrible stock. It doesn't go that way. The overall goal is to have more winners than losers, and have a good strategy on how you're going to deal with the losers, whether it be, I'm only going to let a stock, go so low, or maybe it's like, okay, is this a good stock still that I have full belief in? Maybe I want to average down on it because it is a stock I have a lot of faith in. So there's a lot of different factors that you would take in when it comes to, how you're going to basically, sort of plan it, strategy. And it's always good to have a strategy when you have plans. So when you have a plan going into investing, so you say, okay, well, if a stock does well, this is my plan for taking profits. If a stock does bad, this is my plans for dealing with that stock, or even plan on, this is how I'm going to do my due diligence on the stocks that I'm going to add. That will make your experience so much easier. And when you follow the plan and something goes awry, you're not going to be blaming yourself because you had a good plan. It's just the market just didn't decide to cooperate that day. So something just to keep in mind. All right. Al says, I did diversify into Europe, emerging markets, bonds, Canadian growth stocks for years via mutual funds. And the perform has been atrocious. I am 100% done with that. VOO is diversified enough. I'm just going to hold 98%. There we go. It continued over. I'm just going to hold 98% of my portfolio in VOO, even if the U.S. markets plummet. It will bounce back, and that will even out and still be better than holding bonds or Canadian stocks, in my opinion. Yeah, absolutely. I do like a diversification into some of the emerging markets and things like that. But you can do that here by, different, we'll take a look at an all equity ETF. So VEQT, XEQT, those are some great ways. Or in some cases, like, where I'm pretty bullish on India, ZID is a good ETF. And that way there, I don't have to, and this is what I like about it, I don't have to go and learn about all of the Indian market. I don't have to go and get myself familiar with all of these Indian companies. I don't know the culture. I don't know the economic currents in India. So that's why, for me, if I was ever going to invest in India, it's through an ETF, because the management team on that ETF know a billion times more than I do about India. So that would be the way I would go in that case. But yeah, you don't have to. I mean, the biggest market in the world is the US. And Canada's not that big of a market. We're about the same size as the Australian market, to be honest. But, you can easily have a great portfolio that invests in Canada and the US. You don't even have to buy US stocks if you don't want to. You can invest in things like VFV that, does the S&P 500, or, there's a lot of different ETFs here that you can gain a lot of great American exposure. And then there's also CDRs. So the certificate of depository receipts, you can get those through CIBC. They're all available, of course, on your broker. So there's lots of options out there for you when it comes to actually, getting as much diversification as you want. And that's pretty cool. That's one of the nice things about this country. And also the nice things about being so close to the United States means that we have just so much, there's just so much connection here, and it makes it all very easy. And the beautiful thing too is if you do start to go into American stocks and American companies, luckily, a lot of them are companies that we're familiar with. Like, we've grown up with companies like Johnson & Johnson. We know the products that they make, Procter & Gamble, of course, the big ones like Coke, McDonald's, all of those. We know these companies. So it's not that hard. It's not that big of an adjustment to go into. And plus, there's a lot of money to be made in the American market. You just have to navigate it the correct way. Dealing with, of course, withholding tax, and how can you minimize that? You're probably, if you're a heavy American investor, you're probably not going to be able to minimize it 100%. And most of you, for example, any of you right now that have VFV sitting in your TFSA, you are losing a tiny bit. You just don't know it, because all of the American companies that Vanguard is investing in, the IRS has taken 15% of all of the dividends coming back to Vanguard. And then when Vanguard decides on the dividend that they're giving you for VFV, that money is taken out of the pool. So when they're calculating their dividend, it's a little bit lower than what it would be, because that's just money that the IRS is taking. So you do get exposed to it. You just have to, one way around the VFV is if you're like, I don't want that to happen, well, then you could certainly go with VOO instead and put it in your RRSP. Then you're not getting any of that withholding tax. But, and here's the big but, on the other side, even though you're not getting that withholding tax, you're making it 100% taxable when you eventually do pull it out. So that's kind of the compromise. So to save a tiny 15% on the back end of VFV, you're basically making VOO into their completely 100% taxable. So it's something to think about. But I mean, if it's a situation where, you're planning to do that anyway, why not? All right, time for coffee. Okay. And we didn't even talk about the story I put in the title. This just came out today. So WestJet, their mechanics are looking at going on a strike. So I can't remember the exact date, but they will be within striking position, I think, is it midnight tonight or midnight tomorrow night? This week. So we'll have to see whether or not that goes through, because I did mention, I think in the last market close, that all of the main airlines are looking at pumping up their prices for the summer travel. Now, if all of a sudden we lose, if we get this strike, that's going to ground because you can't really send planes up that haven't been inspected and all of that fun stuff. If WestJet gets taken out of the equation for a bit, that could put a lot more demand on Air Canada, and that means maybe even higher prices. So this may not be the best summer for traveling, but hopefully the strike will get resolved quickly, or hopefully they'll get to a resolution before the strike happens. But right now it doesn't look promising. So we'll have to sort of see. Paul says, will Costco get to $1,000 this year? I don't know. It really depends. I don't even know where they're at right now, but let's find out. All right. Costco. There we go. So right now they're sitting at 870. Look at the last. They've had a nice run. They've certainly had a nice run. So I mean, based on this, if you're looking this and say, okay, well, they got about 6 months left. Look at what they did. They've easily done. If they did the same, if they repeated the last 6 months, then yes. But things don't always work that way. Really depends on things happening in the economy. Now, Costco is hugely popular. One of the reasons is the fact that you can get all that bulk stuff. I mean, you can go there and you can choose. If you want to get peanut butter, for example, you can get a jar of peanut butter that, you almost need to have a weightlifter carry it to the car for you. It's funny. It actually, a lot of people think that they're saving a ton of money at Costco. They're not saving as much as they think they are, but the illusion is enough to keep people coming back to Costco. And that's definitely good for Costco's bottom line. Will they hit 1,000? It's a good question. I think they'll definitely hit 900, but I'm not sure about 1,000. I'm not entirely sure, but I do like the growth that they've seen thus far. So I could be, I kind of hope I'm wrong on this. I'd love to see them pass out 1,000, but I'm going to say, I'll even say 950 might be possible, but I don't know about 1,000. I don't know about 1,000. And yeah, exactly. Costco was up 71% in the past year. Well, here, you know what? Let's see. Let's go to simplywall.street. Let's see where they are predicting Costco to go. All right. COST. All right. Costco. All right. So they're saying the earnings are forecast to grow about 7.03. All right. That's cool. Let's see here. All right, there we go. It's like you want to see the full report, you have to. All right, give me a second here. All right, here we go. So let's take a look at these price predictions here. All right, so this here is. So here's the interesting thing. So on, they're actually, the analysts are not predicting well for Costco. Currently, they're predicting that it's actually going to go down to 839.02. So they're saying down 3.6%. I'm a little more optimistic than that. Now, these predictions were made at their last quarter, so I don't know the new quarter when it comes out. So that could be another factor. Ask me again after their next earnings report, because then we'll have better data. We'll have better data that we can pull a better answer for you. All right. Let's see. My concern with holding stocks is not being diversified enough. Plus, I no longer can manage my funds as I transition to do-it-yourself investing. Appreciate your thoughts. Thanks all for help. or thanks AI for your help. Let's see. Yeah, I mean, it's one of those things. It's not an easy thing, because obviously when you're using either a robo investor or you've got a financial advisor sort of doing everything for you, one of the big things with that is a lot of times the stocks that they pick are interesting, because sometimes I find financial advisors, they can be very biased. because a lot of times what happens is you got a financial advisor, and let's say they work for the Royal Bank. Most of the times they're going to really be pushing some of the Royal Bank products, Royal Bank ETFs, things like that. And as a result, um, you know, their whole goal is one to hit quotas that they have when it comes to sales. The other thing too is that they're not really motivated by you. They're motivated, and not all. Some there's probably some out there that are very very good, but a lot of them are motivated by the metrics that they have to hit. Because if they don't hit their metrics, they may not be working for the Royal Bank much longer. So it's kind of that whole thing when it comes to a financial advisor. You always have to wonder where the biases, uh, where they sit, and what kind of stocks you're going to end up with when you do that. So when you start going to a do it yourself, a lot of times you kind of are coming out of that spot where you're looking at sort of the narrow view that your financial advisor had, and then you're like, oh my god, there's a whole world out there that I just wasn't aware of, because my financial advisor was just like, okay, let's go with this and this. These are what you need, you're good. um it's not that way. It's not that way out there, and it is a learning process. And you're going to continue learning. You're going to continue learning a lot. And even 5 years from now, you're still going to be learning. But you won't be learning, of course, as fast as you're learning now, because you should have a really good grasp on everything in 5 years. But you'll still find there'll be new things that pop up. Things are always changing. New products come along, like lately a lot of these leveraged cover calls are kind of a newer thing. And it's kind of cool. Like, you'll have chance to see new things, and try to figure them out and all of that fun stuff. And maybe it's like, I wonder what Candace is saying about these. There's all kinds of good stuff like that. All right, John S. Gray, here we go. Stock regret. Chorus Aviation was led to it by a news article in 2015. As a kid who had flying lessons all through my adolescence, this was a feel-good move, but Chorus tanked during the pandemic. Yeah, exactly. Now, in all fairness, had there not been a pandemic, that Chorus could have been a company that might have weathered it along. And so sometimes with a black swan event, you can't beat yourself up about it. It just happens. Sometimes it does happen. Let's see. Mario says, Paul, I have my eye on Costco at 169. Never picked up any. Eek. Al says VOO was super cheap. It is $300 fee for someone to manage it for you for every 1 million every year. Like if you had Intel 12 years ago, you have to get rid of it today. VOO manager will do that for you. All right. Yeah, exactly. So your VOO manager, they're gonna be that, they're gonna manage that portfolio, or at least that basket. And that's what's kind of nice. Like they'll actually register it. They will administer it, taking care of getting rid of the losers, all of that fun stuff. And what is nice is when you have a basket of stocks, if one of them starts to underperform, the basket can still do really well, because the other stocks will make up for it. Just something to keep in mind. Let's see. And 500 stocks in VOO is very diversified, and these companies are often in other countries as well. So it is plenty diversified, in my opinion. So there we go. There we go. And it is. It's a good. I mean, it is a good. VOO is good, and the VFV is also the same thing. So keep that in mind. We do have the Canadian version. Mario says, I blame Candace for my poor performance on Alimentation Couche-Tard. All right, there we go. Yeah, I will take that. I will take that. Al says 5 to 6% returns for years. Waste of my time. Just going to get rid of all the dead weight concepts and go with S&P 500. Solid returns. Close your eyes management. Plenty diversified. There we go. So Al is a huge proponent of these Vanguard accounts, and nothing wrong with that. Nothing wrong at all. Tom says, have you done options trading before? If so, were you successful? I'm retired and was thinking of trying it. I have not played with options. I know a lot about them, but it is on my short-term goal list to actually get in there and do a few of those because I'd like to make a video on it. And I'm not going to make a video unless I've done some. But there are some people, of course, in the community. And if you go over on the Discord, I'm pretty sure there's a few people who do options that hang out in there as well. So you definitely get more information there. But yeah, I'm looking forward. I'm looking towards doing it. Okay, guys, we've been an hour and a half. Holy banana bread. If you got your last minute questions, get them in for me before we close up on this hot day. And it is hot here in Ontario, by the way. Last time I looked, the humididex was 44. Well, you know what? Let's take a look. You guys want to see what the humididex is right now? I heard Jill in the other room going, no, whoops. Oh, there we go. I already had this up. Okay. Just going to open up a new tab here. All right. We will bring up the good old Weather Network. Here we go. Oh, it's come down. It's only 42 now. All right. That's not too shabby. Yeah, 42. I don't think, just taking a look to see if there's any storms coming in. Ooh, satellites. Gotta love them. No, we're pretty clear for storms. I know that there was risk of a storm, but what can we do? What can we do? All right. Accidentally removed me. There we go. I meant to remove that. Let's see. Al says Ireland seems to know option tradings well. Yes. I think yeah, Mike Ireland is, and he's on the Discord, so he is somebody definitely to talk to. Mary says thanks, great as always. Ashif says I am in Vancouver and it's 22, nice and sunny. Nice. Yes, Vancouver is a beautiful city. Tom says I didn't know you were in Ontario. I thought it west. No, I'm based out of Ottawa, so I'm pretty close to all the politics that go on here. But I've lived in Calgary. I've lived in Vancouver. Originally, I'm from Nova Scotia, so I've got a little bit of everything. I've even lived in Toronto, so I have a really good sense of the whole country. That's one of the things I love. I love it because I can pull that in. So yeah, I can pretty much yeah. Or, oh dear gosh. Stephen Orr, thanks. This is great. How much wood would a woodchuck chuck if a woodchuck could chuck wood? There we go. I don't know. I've never measured a woodchuck chucking wood. If that woodchuck could chuck, of course, wood. So, yeah. You can't trick me up on the words because I find I'm getting really good at reading words, especially because I have to use the teleprompter when I'm filming. So, yeah, I can get along. I could say some pretty great things all string together really easily. So that's without fumbling. Although if you watch me filming, sometimes I do fumble and film a line like 6 times. But, for the most part, I'm pretty good. All right, everybody. This has been fantastic. You guys have been awesome as always. I love doing these. We will be back here, of course, on Friday, and we'll do it all over again. Of course, a huge shout out to Paul, Harold, and Kevin and Kaz, who brought you guys the bonus for Friday. So that is fantastic. The deep dive is going to come out tomorrow for the channel members, Friday for everybody else. And I can't wait. And we'll, of course, also be back here on Sunday for the this week. So it's all fantastic. Everybody have a great day. I will see you Friday. I can't wait. Bye, everybody.